Hello, Kevin Newling here, KD Investors. Today is Thursday, January 21st, I believe. And I just want to talk to everybody about the technicals, show them on with my screen what I'm looking at so you can see for yourself. And, um, maybe have a look at the weather if we have time. Not hold you back long. I'm using the wave model a little bit more than normal just because it's at an important. Um, I guess my 4 o'clock apple break for the deer is a little early, so anyway, got to keep the deer happy. Um, anyway, forgot my train of thought there, but um, um, the shoot. um, well, you guys said I was too dry last time. This time you got deer, you got, this thing probably won't work anyway. I don't have the blue square on my face, which is a bonus. So we're getting better at it. Anyway, but yeah, let's look at the charts and let's talk about the pattern that's developed. It's a closing pattern. It shows you the reason I'm using it is because it only applies in long-term trend change situations is what we have, which is exactly what I think we have in the grains, at least till proven wrong. So I'll show you that and walk you through what needs to hold. I'll look at the dollar index for a minute and we'll just kind of go from there. So see where to start. Let's start with corn first. Um, as you can see with corn, we made the primary low. This is a weekly chart and a continuous. We made the primary low in early fall of 2016 and just had what I would consider the first leg up, topping out in their low 390s, and then we've sagged, making the wave two. Is it complete yet? I don't know. We may have to fuss around here. We've been in, basically this 350 range for the entire marketing year in the 2017 corn, but longer term, this is constructive. This looks like, as you can see, when we get to July, the last couple years, last 3 years, we've just died. We died in 15, we died in 16 in July, we died in 17 in July, basically when it looked like the crop was going to be made. So this year it didn't line up with the crop conditions at all. The entire year the crop conditions were 10 or 15 points lower than 2016, and so we really didn't expect to have a record yield. We expected something in the mid high 160s at the most, and now people are thinking USDA in January will be in the almost into the upper 170s. So is it real? Is it not? I don't know. The trouble is there's enough buffer that can be implied as real. So until you get in a situation where you're tight enough to really grind the stocks down, you just don't know what the truth is and what's there and what isn't. So we can't really argue with them and do any good. Now, if cash gets tighter than it should, then you can start making some better arguments. But at the moment, you just have to presume them right because that's the way it's going to be traded. So nothing jumping off the page with corn other than it's almost completed its pattern, and we might see some movement here. Not expecting a big move yet. We do have a billion bushel short position with the hedge funds, like 1.3 billion bushel short, so that's good. But without the help of soybeans or wheat pulling it up the hill, corn's probably going to be the market that's a dog. The ethanol numbers are fantastic. They're running 4% over last year's levels. USDA predicted them to be, I think, 1.5% higher, and we're running at 4%. That's going to knock more bushels off the carryout over time. And if the yield ends up being lower, that's going to knock bushels off. So, you know, the question is, do we belong below 350? I don't think so. That chart I showed you in my last update showed you historically over the last 10 years it has not paid to sell corn under 350. So anyway, moving on, let's look at this is the daily pattern in wheat. As you can see, we're in a pretty clear downsloping channel. There's nothing jumping off the page with the daily chart in wheat. You know, if we close over this trend line, this one's not perfect, but if we close over this trend line, you know, if we have an up day tomorrow or next week, that's going to kick us above this and break it out of the 3-month channel we've been in. We'll see if we can get that done. Might take some news to actually do that, but as far as the daily goes, nothing jumping off the page. If we can take out this high here of 441 or 2, if we can take out that high, then that would really be the thing that says something has changed and it's getting ready to do something. But as it is, we just continue to make lower highs, lower lows. But if you recall this day here, this is when the index or the hedge funds were tracked as 850 million short, which is just below the record. And what incentive would they have to sell here? I mean, I just can't come up with any. So otherwise, moving on, if we look at the continuous weekly, this is what I had in my last report, but this is a good pattern for a closing pattern using the wave model, and that's why I've brought it up so much. I'm like, say I don't use these things all that much, but I do use the text if there's, you know, if we're looking for trend change, if we're looking for a closing pattern, then, you know, we've been in this bear market for 6 years now, so we're definitely looking for some close of the pattern. If we look at this chart, we made the primary low in August of 2016. Okay, then we just kind of slowly ground higher throughout 17 and made our spike in June, I should say, when the northern plains were droughted out. The USDA came in and put a stop to that and didn't use any abandonment and didn't have any yield hit at all from the drought. And I think that northern plains producers had a pile of old crop wheat that they liquidated on this move, and that, you know, really sent us into a tailspin into August and September. So if the wave pattern's accurate, this low has to hold above this low, which it did. It has to be a three wave move down, which is 1 here, 1 down, 2 up, 3 down. So that's accurate. So I like what I see there. You know, it fits all the parameters of a closing final nail. And the good news is, under this pattern, the next wave up would take us beyond this high, and that wave could be starting right now. It's hard to say. Again, but your primary low is in 16, your wave 2 low, which has to have, you know, the psychology is also important. The psychology right here in this region has to be more bearish than it was in 2016 when we made the primary low. And after talking to some of you guys, I think we're close. We have to get everybody just basically saying that there's a new paradigm, that wheat markets are never going to move again. The Russians are going to dominate the whole thing forever. That's the kind of psychology we have to prove the low. It's just like on the inverse, when we get really high, we have to have the psychology that we're never going to drop again. And once we do that, then that's usually the end of the run. So anyway, the psychology matches, everything here matches what needs to happen to final close. So I'm using the 2006 analog for our cash wheat position. 2006 was, it was basically a transition year, as I think this is too. It's a transition year from being overstocked to I guess a historically tight situation. And if you take the Chinese out of it, as we've talked a lot, that's what we're going to see. But we're not going to see that till May, June. But what you end up with is not necessarily a market that has downside risk. It just doesn't explode higher yet. It's just a transition year, just like 2006 was. So we stay flat. We kind of grind higher throughout the winter and spring. If there's any weather hiccup, we'll get one of these events that runs up fast, and that closes the year out and kicks us into 2018. So, which should be a historically tighter year. We're going to have more demand growth, and we're going to have sounds like lower acreage everywhere so far. I don't know about the southern hemisphere yet. They've had some pretty strong wheat prices in Australia, so that might encourage them to plant more. We'll see what they do. But the stage is set for some better things. Lastly, we'll look at the dollar index. As you can see, it has a head and shoulders pattern. Here's your head, here's your left shoulder, here's your right shoulder. This is bearish pattern. If I look at that, I say this market's probably going to trend lower, probably down. It'll eventually take out this low and continue lower based on this head and shoulders pattern. If I'm wrong, technically this thing will come back up here to the top of the right shoulder and close above it, then you'll know I'm wrong and it's a different pattern. But looking at it today, that's the pattern we have, and that's the pattern that looks like trouble for the dollar. So that may give us a lot of support going forward. One of the reasons I've been expecting fuel not to back up as far as we think it should, because the dollar is going to bleed off 10% or something like that, then we know that fuel prices are not gonna drop down. So our buying window is probably right now. Other than that, the weather, the models are doing a horrible job. We've got normally there's 4 or 5 days where all the models are pretty close together, and then after that they depart and have their own little ideas. But right now, models can't even agree 2 days out. So how cold is cold? How far west does the cold go? How far south does the cold go? I don't think the models are doing a good job of telling us. This was released today. Has rain in the dry spots pretty much, and all the way through the drought areas get rain. Just kind of a bizarre pattern to have normal precip here, but dry in it's I don't know, it's not La Nina like, let's put it that way. So we'll see what continues, but there's really not much else to talk about. One thing I found interesting is the wind chill outlook of this coming, well, this isn't it. Let's see. We want the probability below 0. So here's your probability of wind chills below 0. Keep in mind, at the moment, there's no snow cover south of South Dakota, or even in South Dakota from there south. So Nebraska, Kansas has none. Pretty much the whole wheat belt over here doesn't have any snow cover. So you got an 80% chance of below 0 wind chills in South Dakota, 70 in Nebraska, 40 in Kansas, 30 in Oklahoma. So to me, we got definitely some risk there for the winter wheat if they don't get a snowstorm to protect it. So we'll be paying attention to that as we go. Let's just see what happens. But to close this out, I guess have a Merry Christmas, and like I say, I hope you can think about something other than wheat markets and corn markets for a little while. I'll update as I can. If something is worth talking about. At the moment, there's not a whole lot. So hopefully the technical talk here did some good. Anyway, I didn't get on the phone this week like I wanted to. I was hoping to talk to everybody, and the whole household got under the weather, and we stayed sick for a week. Today's the first day I've had a little bit better voice. Yesterday was not so good. The day before that was worse. So hopefully we're over the hump there. It's been no fun. Hopefully you can avoid that for the Christmas season. And anyway, as you can see, it's dry out there. We need some rain. We need some December weather to hit, and December's about over. So, such as it is, a different La Nina this year. So, anyway, thank you, and call if you have questions, and look forward to talking to you soon.